Before we jump in today's video, I just want to remind everybody that I'm not a financial advisor. So this video is for educational and entertainment purposes only and should not be taken as financial, investment, or trading advice. All investments involve risk, and you should do your own research or consult with a licensed financial professional before making any investment decisions. Just remember, past performance is not indicative of future results.
Hey everybody, it's Paul here on my channel, Better Call Paul. And today I really want to help you guys build your portfolio more effectively in 2026. And I don't mean that by telling you you should buy this fund or that fund, which ETFs to pick up, so on and so forth. But if you already have a portfolio and you're kind of wondering which areas you should add to, which areas you have too much invested, and you're not really sure, maybe you're like myself, you've loaded up with 30, 40, 50, covered call ETFs or a variety of income funds. You have money coming in daily, weekly, monthly now, and it's gotten to the point where you're almost confused. And the problem is that these ETF providers keep coming out with new products, right? There's a new ETF being launched, it seems like, if not daily, at least weekly between Canada and the US. So if you live in the US, it's a little bit easier because you're probably not able to pick up Canadian ETFs, or it's not worth it for you because of the tax implications. But as Canadians, we can buy very easily. We can buy the Canadian and the US listed ETFs, and if we put them in our RSP, we don't have to worry about any 15% withholding tax. So what I did was, in my last video with Perry from Perry's PIIverse, we decided to implement his pillars using my portfolio, right? So we took all of my holdings and his three-pillar system, and we categorized all of my positions. So I'm going to show you what that looks like and how that helped me out personally. All right, so here we are in my spreadsheet, and you can see on the left side here, we have the three categories, which is anchors, boosters, and juicers. These are names that Perry came up with. So anchors are 25% yields and under with a composite underlying. So when Perry says composite underlying, he means it has to have more than one underlying stock. So it can't be a single stock ETF, has to be a sector or an index or a group of stocks. For boosters, the yield has to be between 25 and 60%, and it also has to have a composite underlying. And for juicers, any ETF with a single stock underlying or composite ETF with greater than 60% yield. So even if the yield is 10, 20%, if it's a single stock underlying ETF, he considers it a juicer because it's higher risk, higher volatility. And then if it's a composite ETF, but the yield is greater than 60%, then it's also considered a juicer. So if you look at my list of ETFs, I can now very easily identify which ones are anchors, which ones are boosters, and which ones are juicers. So right now on the screen, you can see that I have all of my anchors listed here, right? I have ENCL, which is an oil ETF. I have UTES, which is utilities. I have TSPY, obviously the S&P 500. I have CANI, which holds 10 Canadian stocks, HYLD, which holds other ETFs and a lot of US exposure. TDAC is the NASDAQ. SPY-T is also the S&P 500. SD and QD are very interesting. They hold ETFs that are not covered call, but then at the same time, they have 25% leverage that they write calls on. HHIC is Harvest's Canadian income fund, where it holds, I believe it started with 10. I think right now there's currently 10 stocks, and HHIS.U is, this should probably be a booster. Did I put this in the wrong place? I think this might be a booster. Anyways, if you look up here on the top right, you can see that by looking at all of my anchors and boosters and juicers, Okay, what I did was, first of all, I went through them all and I figured out what my book NAV was. So for my anchors, the book NAV was 132,561. So that's not what I invested out of my pocket, right? From contributions. A lot of that is from reinvestments, right? If when my ETFs produced monthly distributions or dividends, I was able to take some of that and put it into these anchor positions. But now, if you look at the current NAV, um, it's 100. It's actually just below where it was, so it's now 132,314. But you can see that as a book NAV, it made up 29% of my portfolio, whereas now it makes up 34%. So even though it hasn't really grown, in fact, it's down a little bit, it's a larger portion. And the reason why is because anchors don't drop as much as boosters or juicers. You can see that my boosters went from being 172,000 down to 149,000, right? So they've dropped a little bit in share price, but still maintained a 38% position weighting. Now, this is the big one, right? So my juicers, I put in 148,000. It's currently worth 101,000. So it went from 32% down to 26%. And now this is the sort of like the situation that I'm trying to rectify. I don't want to have a whole bunch of ETFs that have high distributions, but that the NAV or the share price is declining so much so that the distributions are also declining. And I'm constantly fighting to keep my distributions up. Okay, so I hope that makes sense. I'll scroll down here and you can see I have my boosters, right? Which the first one is HHIS, and then Biggie. I have YMAX, QDTE, AIPI, RDTE, YMAG, YPay, and blocks. And as you can see, guys, what I do is I keep track of how many shares I have for each one, and then the current share price. And then here it shows you the book NAV and then the current NAV. Now, one thing I was kind of surprised about was how many juicers I had. And I guess some of these ones that I bought when they came out, like MSTE, CNYE, PLTE, to me, they just seemed like great companies, right? Now, I could purchase them as a single stock ETF without having to buy Yield Max. And they all came with great monthly distributions. But I didn't realize, sort of like how many single stock ETFs I was buying, or what Perry considers juicers, right? So these ones tend to be more volatile. So you can either make a lot of money with them, right? And the distributions can be very high, or vice versa. The share price can drop quite significantly, and it can hurt your portfolio that way. And also the distribution can get cut. So what have I decided to do with this information to try and further understand my portfolio and track it during 2026? So I've always kept track of my dividends, how much I was making each month. And I was keeping track of how much I was making in my TFSA, how much I was making my RSP, in my non-registered account, right? And I was keeping track of how much I was making in RBC and how much I was making in Wealthsimple. But I wasn't really keeping track of how each individual ETF was doing. So what I decided to do, and I'll show you now, what I decided to do was come up with a new chart. And I came up with this idea when I was talking to a viewer who reached out to me. He wanted to just chat a bit about his portfolio. I guess not a lot of his friends are interested in investing, or they're not into covered call ETFs. So he wanted to talk a bit about his, and he's got quite a significant portfolio, almost close to $3 million. So we were chatting, and I was taking a look at some of the spreadsheets he had, and I thought, you know what, I really like this idea. So I decided to implement it myself. And so what you can see here is that I have my anchors, and then I have my boosters and my juicers below. And what I did was I put how much I made from each ETF in January. Okay. And what I'll do is I'll track it every month, and we're going to see whether or not it's consistent, if it's going up or it's going down. Now, in some cases, it might be going up because I'm buying more shares, which makes sense. It should be going up. But in other ways, it could be going up as if the ETF, the fund manager, increases the distribution, right? Like they did with HHIS, they increased it from 25 cents to 26 to 27. Or vice versa, it could go down, right? Sometimes they cut the distribution and it will decrease. So what I'm hoping to see is all of my anchors to remain very consistent. And I plan on working on building these positions, and I'll show you why. For my boosters, I think these should be quite consistent, but not as consistent, right? HHIS, Biggie, AIPI, QDTE will probably be fairly consistent. YMAX, YMAG, WPay, and blocks will probably fluctuate. And then you come down to the juicers, and we're probably going to have the most amount of fluctuation, right, in the share price. Although YTSL has been quite consistent. ETH has been fairly consistent. RDDY has been consistent, but MSTE we know has dropped quite a bit. Alti is all over the place. CNYE was very consistent until recently. It reduced its distribution by 5 cents. So on and so forth. You get the picture. The three down here that I didn't assign a color to is because I no longer own them. So I did receive these payments in January, but moving forward, I won't receive any payments. All right, guys. So here we are at the bottom, and I think this is really a telling story. When you see how much I'm making from my anchors, my boosters, and my juicers. And you can see that my anchors is paying the least amount. And it kind of makes sense because they tend to have lower yields, but are more stable, right? Boosters have quite a bit of boosters. They do offer higher yields as well. So this is doing very well and paying me the most. Now, juicers, my juicers should be the highest payers that I have, right? I should be making more money. I should probably be making about $5,000 a month in juicers. The problem is that in November, when Bitcoin, MSTR, and Coin dropped significantly, so did any ETF holding those underlying stocks, and therefore so did their distributions. So that's hurt me quite badly in terms of the size of my portfolio and also my monthly income. So therefore, my goal moving forward is to really focus on building up my anchors. And so using the distributions from my juicers and my boosters to buy more anchor positions, right? And then by tracking it month to month, we'll see exactly how well some of these positions are doing. And I'm not necessarily debating on whether I want to sell them based on that information, but we can just track it. And nonetheless, I'm going to use the distributions to add to my anchors. In some cases, like I've looked at YMAX and trying to swap it out, maybe buying HHIS.U, but the problem is the yield is so high on YMAX that I'm gonna really reduce my monthly income a lot by doing that. So I'm weighing out the odds of just using the distributions to buy HHIS.U versus selling YMAX and putting all the money in one lump sum. So that's what I'm currently considering. All right, guys. So that's two ways that I've kind of now analyzed my portfolio based on the pillars, right? So which ones are my anchors, which ones are my boosters and juicers. And now I realize that I have to add more money to my anchors. But then furthermore, to take a look at where the money's actually coming from, right? And the bulk of the income is coming from my boosters. The least amount is coming from my anchors. So for the next little while, I'm going to be pumping as much money as I can into the anchors and buying more of those. So guys, I hope this was helpful. I am going to take it a step further. I think I'm going to try and take a look and see what sectors my ETFs cover. So, whether they're financial or what is their healthcare or anyways, guys, I'm gonna have to dig into that. I don't know all the sectors off by heart. I can't think of them right now. It's been a long day. I don't know about you guys, but where I live in Ontario, it has not stopped snowing for about the last 8 hours. I've been outside shoveling 3 times already, and I had just sat down to watch the Denver Broncos and the Patriots play. But I really wanted to do this video for you guys, so I took a break. I am wearing my Sayulita t-shirt from Mexico because I'm dreaming of warmer places and trying to get away from this cold as soon as possible. Anyways, guys, I hope everybody had a wonderful weekend. I'm really looking forward to tomorrow. Hopefully, I can pick up another 50 shares of TDAC, and that will put me at 500. And then I can sort of reevaluate that situation and see where I want to go from there. But again, guys, this video, the purpose of this video was not to tell you which ETFs to buy, taking a look at my portfolio and saying, okay, well, Paul owns ENCL, I'm going to buy it. He has HYLD, I'm going to buy it. That's not the point of it. Any ETFs you guys want to purchase, make sure you do your own due diligence, check out the websites, the prospectus, watch multiple videos, do whatever you need to do to figure out your risk tolerance. Keep in mind that all investments have risk, okay, including covered call ETFs. There's no such thing as no risk. All right, so make sure you do what you have to do to keep your portfolio safe. And until the next video, bye for now.